What we're witnessing in the crypto market is arguably one of the most textbook bull traps in crypto history. And if you aren't braced for this massive pivot, you're essentially playing Russian roulette with your savings and your entire crypto portfolio, which is why today I'm exposing the precise technical signals proving that the 4-year cycle has officially reached its terminal climax from a private call that I held for our Altcoin Pro University members. The value that is in this video is bar none some of the best you're going to get in all of YouTube, and I will prove it to you as you continue to watch. And we aren't just going to be glancing at price action, we're weaponizing the 4 horsemen of technical analysis to spot these lethal bull traps before they vaporize your entire crypto net worth. You're going to learn exactly how to master volume contraction, expansion, and time your moves with surgical precision so you never get caught holding a bag near the top ever again. This isn't about being bullish or bearish. This is simply about being on the right side of the market. And yes, you can make money on both sides of the market. It's about being objectively right and shielding your wealth so you can continue to build it through the upcoming years. Now, before we discuss all of these charts and dive into this extremely valuable recorded video, go ahead and check out today's sponsor, I Trust Capital. They empower you to trade crypto and gold 24/7 directly inside of an IRA or a Roth IRA as a great tax advantaged account. In other words, your gains can grow 100% tax-free in some of these accounts, and you can roll over any one of the accounts that you see on this page, like a 401k, a TSP, a 403b, and more. So go ahead and check that link out in the description or bio below and stop handing your profits to the IRS on every single trade. Now let's break down exactly how I predicted that this market structure is now shifting and has flipped for the bears to be in complete control. Everything you're going to learn on this call will help you to stay 3 steps ahead of the curve. And as always, if you're feeling blessed and bullish, comment 777. And if you're going to be the wealthiest person in your family tree, smash the subscribe button. I think we're done with the cycle, ladies and gentlemen. And one could argue this was a 4-year cycle. I just think the idea of a 4-year cycle was very synonymous with a blow off top near the end of the year, where you get some pretty nice rallies, right? In the past, from prior all-time high, when we're talking about, and I'll cover Bitcoin, I'll cover other cryptos. But in the past, when we had an all-time high, you can see that our next all-time high, if we really were to talk about this was a bull trap, really. The actual technical top came in right here sometime in April of 2021, was still a 240% return. Okay, and this is why it's so helpful to look at charts and just do your own analysis and have a basic understanding of, simple tools. And the first tools that I'd always recommend and ones that I always use, and you might not use this one right here, which is just a paintbrush, right? Because you're not training and teaching like I am. But I always use, my crosshair tool just to kind of so you can see it. There are other versions of that. You have the dot, but it's just, I don't like the dot. I just like the cross. I use the vertical line tool, the horizontal line tool, and arguably the vertical tool I always use to just mark a day and time. So notice how right here, when I don't put that tool on there, I don't know what day and time it is right over here. Do you see that? But when I toss the line on there, it denotes, oh, that was Monday, December 18th of 2017. And that is when the actual technical all-time high came in on a 2-week time frame. So I can zoom in a little and say, well, when would that occur on the weekly? Okay, it occurred again on the 18th. So that was the actual close. Perfect. What about the daily? Probably the 18th yet again, right? But then once you start to get into the hourlies and all that jazz, it really kind of helps you to see what period of time we're looking at. Either way, this is very helpful because then I can say, well, over this period of time, right, we bottomed locally. So how much time was that? Very straightforward, right here. Grab the tool. And I do like having my own favorites tab of tools. Okay, I don't use all of them all the time. But I always recommend that you learn how to use your basics. The reason I don't like this one right here, which is a measurement tool, is because then it usually disappears the moment I'm done using it. And sometimes I like to keep it on my chart and then I just click delete. Okay. So, but in general, these tools are extremely helpful. your trend line tool. You could say, okay, here's your trend line. The problem I don't, especially for beginners, the reason I don't like trend lines is this reason exactly. Let me remove this drawing, those drawings, and just focus on the high here. Okay, you can see that I can take this trend line tool up until this point right here, and I will replay it. Oops, what the heck just happened there? Yeesh. That's just popping up for no reason whatsoever. Okay, so like I can drag it to, let's just say this range right here. Okay, on the daily time frame. And you can see that technically this is a period of time that Bitcoin has been trading from that prior all-time high till for another 117 days. Okay, putting in a series of what? Lower lows and lower highs, especially through this range here. Then it kind of double bottomed right through here, right? Once and twice. This is why I like having these tools readily available. And you learn, where you keep them. Some of you might like keeping them up top and you can just click and drag and drop. This box tool is also very nice because I can say reasonably, right? This seems to be a pretty good range of support between the prices of 6,800 to 6,400, right? Um, you can make them look however you'd like. And this is stuff, again, you should learn in technical analysis essentials. These tools are extremely important to helping you plan out, your next play and just look at a chart very fundamentally. So, that said, we're in a technical downtrend. We have a double bottom here, and that is playing out quite nicely. But this is why I don't like trendline tools. And this is why it's not one of the major four horsemen I always train and teach. Okay, this technically right here is just a horizontal support. How do we know? Well, we didn't up until we bottomed here and the price started breaking for a new local high right above this prior high. If we really zoom in and say, does it look like we bottomed here in the short term? The answer is yes. Okay. And we also did in February. So, what determined that line that I drew? It's literally just the market. For whatever reason, market participants, institutions, you name it, all looked at the price of 6,500 and said, we want to buy there. And because of liquidity issues, because of supply and demand, because of futures trading, and all sorts of other factors and dynamics, right? The price kind of consistently played between 68 down to, I would say, right here at 64. Okay, and on the very low, right, on in the case of low liquidity or a flash crash, if you will, on a very short-term time frame, 5,900. But generally speaking, I wouldn't use the wick as much in my analysis as I would use where the majority of the traders traded on that price action, which was really between these ranges right here. Okay, so that's just how I determine that. I determine it because the market determined it, and I just place a line there. Now, we have a downtrend, okay? And this is easily denoted by the fact that we have a series of lower highs that are playing really well with the line that I also drew. I just drew it, okay? And I'm going to drag it all the way to the end. And so I'll play it for a few more lines here or a few more days, and we'll just see what happens, okay? Now, notice right here, you always get some people that kind of jump the gun on that, and why I wouldn't even argue it's jumping the gun. This is a relatively higher probability play if you really think about it. Okay, the reason is because not only do we have one touch, two touches, and now the third touch of the trend line, but we're being supported very consistently at these lows by at least 2 points. Okay. Coming back into this range and potentially seeing volume increase and expand, which we're not really seeing there, which is maybe an indicator that it wasn't good to go. That things are looking okay. I'll play it out one more day and see what occurs. Right? Look at this. We're officially above. If you took a little pilot by there, wouldn't be a bad idea. But do you notice what's happening with the volume? And again, I will make it simpler to look at. Okay, just for your guys' eyes. Just looking at the volume, what do you guys see here? We see a very minor expansion right here, right? We also saw an expansion here. But in general, we're seeing a consistent trend to the downside. Okay. So we're getting lower highs even on volume. As the price is what retracing, we're not really seeing volume truly expand relative to the index. So this tells me it's not a great position to be in, which means I would keep a tighter stop. One, I like to see expansion of volume. I like to see bigger breakouts too on average. three, right? You have a pretty strong resistance. Where the heck are my tools? This is why I keep them at the bottom. You have a pretty strong resistance, it seems, right here. Do you guys see that? Right? Little bull trap here. Genuinely a bunch of resistance here. Horizontal support and resistance. Resistance yet again, once and twice. So three separate times essentially in this range we sold off. So 11,000 is going to be the price to beat. A lot of people, when they don't know what they're doing, they don't use volume. They see a little breakout because they draw one line on there and they're like, oh, this is it. It's obvious it's it. And why wouldn't it be it, right? They remove if you remove all the lines and keep this red line right here, this trend line. Oh, it broke out. Buy. But you guys saw what happened, right? And play it out. All we did, right, was traded with the trend. This right here now is your new top. Now, question, is this high higher or lower than the prior range highs? Lower. The price on that is 98. The price over here was 11.5, 11.6. This is a downtrend, textbook, which is why I don't like trend lines, because most people would be buying this. And imagine buying this and in if what that next 2 weeks you're down again for no reason other than the fact that you just had no discipline. The volume didn't give you any good signals. We're trending down, and we saw another major sell day there in terms of volume. See that? On average, we're seeing more consistent selling than we are buying. The buy volumes are on average smaller than the sell volumes. You learn to look at this stuff. Trend is down. This is not a good trend line. So you know what a lot of people do? We all know it. You've done it. Oh, that's the trend. What a waste of time. Right? Like, this is a textbook downtrend. If I was really wanting to buy this and I hadn't already bought in on this one little breakout day right here and waited to see what occurs once we hit this range up here or whether we start breaking down here, it's okay to not make money on this trade, right? It's fine. But your timing sucked. And now you're playing roulette like with the market. You're trying to be God to the market. Oh, now this is the actual. I'm gonna tell the market what it is. This is the trend line now, right? You're not God. And so the way that I look at this is a textbook downtrend, and it's arguably kind of what we're seeing on in crypto, the crypto market right now. But now you're gonna have to wait until this range right here. So in my opinion, unless you're like day trading and like you're truly like using, quite a bit of leverage or even just a little bit of leverage, my personal opinion is timing. If you don't make it in the right, in the right excuse me, if you don't make the right play in the first day or two of a move, you're gonna have to wait a while until the timing is right for you to enter or exit again. In other words, if you start entering up here, wrong time. Because we don't even have confirmation that the trend is truly changed. We do have a double bottom here, but we have and moving trend lines and all that jazz. But look, what occurred? Another touchdown of this range here. So here is where it's decision time. And you'll notice volume just kept declining, 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 declining. Oh, a little expansion. Okay, but not a major expansion. So nothing to write home about, right? Maybe on a breakdown. Let's see. Do we see it? Notice how we're just like playing with the range now, which is why sometimes it's nice to have a box tool, right? We'll see this. Look, right back here. Okay, cool. So now looks like we're being pretty much resisted at this area up here. And it's okay to move a horizontal line of resistance, within a few points, right? Like in this case, Bitcoin moves thousands of dollars, but in another crypto, it might be, 5 cents, 2 cents. It depends on the crypto. It depends on the market. But this looks to be a pretty strong range of support and resistance now. And with Bitcoin trending down, where would you like to place your bets? To the upside or the downside? Probably the downside, even though a lot of people say, oh, it's already down, in this case, 67%, which is quite a bit, right? You know what's funny about this though? Bitcoin dumped another 50% from here. So just because something's down a lot doesn't mean it can't go down a lot more. Okay. And this is where you really need to practice good risk management and discipline and bet with the trend. Now, notice what occurred here. We'll put those lines back on there. So this is like some good, this is like good to look at what occurred in the past so you can kind of use it for your trading in the near future. Okay. We'll try to get this. Another Yet again, lower high. And I don't know. Let's see. This will be funny to look at. Look at how much you would have been wrecked there. Oh, it's being supported here and here now. Look, it's a confluence of supports. We broke out above my new trend line and we broke out right above the horizontal resistance. Now we're being supported both at the horizontal support and at the trend line. Let's see. There's just too many ways to get wrecked. When in reality, what you should just be looking at is remove all that. Okay. Put a line here. If you want to buy this and play it for a small while, this is your support straight up. But what are we seeing? Series of lower highs, right? You could even argue here, 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 and now here. And guess what's occurring with volume? This is where you really get a good read. Look at the volume drying up. Whenever volume contracts and dries up, and price action also gets more compact and tightens in a range, the more likely you're getting very close to an expansionary period. This is where you actually should get excited. And what that means is you can bet with the trend, right? You can take on a bit more risk here, just a little. If you're, because when the price action tightens like this, you see how tight this is right here for a period of 60 days relative to how not tight it was, right? Through this range here, another 60 days. See how volatile this got? And even more so here, and even more so here. The volume's telling that story. So is the price. Where I get excited is when I start to see this. And this means now I can set tighter stops too. Because the prior high up here, if I set a stop here and I'm betting here, this is a bigger move to lose on. But if I'm setting a stop just above this high, it's a far smaller move to lose on, right? So it's just better to place bets, especially when you start to see volume seriously contract. But where do you place bets? In the direction of the trend. Now you can counter trend trade, sure. I just wouldn't risk as much on average on that. So that said, right? No trend lines, in my opinion. It doesn't mean that you can't use them. It's just it has to be very specific to what you're trading, how you're trading, the time frame you're trading. Um, and I think that's really important. Okay. So let's go ahead and here's your deal, and we'll just play it out for a bit more and just see what occurs. We know what occurred, right? We got a nasty breakdown. This is crazy, by the way. I don't know if we're ever going to see a contraction of this magnitude on something like Bitcoin again. I mean, this is a really, really tight range, right? But even volume, look, just smaller and smaller and smaller. And it was easier back then than it is now to see these types of trends. But over time, again, you start to train your eyes, you start to see it. You really do. Which means you really need to get comfortable looking at volume. Okay. Play it out a little bit longer. Bam. Now, look at this. Before we get there, this is almost like, does anyone know what this kind of looks like? There's always news around it. Nobody remembers what occurred here for news, right? But in more recent history, what did we see? We saw an October 10th breakdown, right? On October 10th, that mass liquidity crisis event, right? Where there was a ton of liquidations across the board in all exchanges. And this occurred, and everyone wants to buy the dip when in reality, you should be betting with the trend. Now, if I didn't already place a short here, which I usually don't, right? If I was already adding position here, that's perfect. If you're adding a little here, adding a little here, keeping tight stops, it's perfect. I'm not stopped out. I'm not stopped out. I'm not stopped out. Maybe add when you see a little bit of a breakdown, but don't overdo it. Okay. Wait for the market to come to you. Market actually breaks down here. You're in the money. But in this case, if you're not already in this, I don't tend to like add a crazy amount into a position like this. On the first breakdown, I will, but it's a little bit smaller than if I was consistently right through this range. Then what occurs is more often than not, you'll see the market retrace a little bit, and then wherever you start to see it break back down, I will start to continue to short sell in that case. But here, right, the market actually just kept dumping and puking. So this is a good signal. When I see a lower low on a wick, I'm like, okay, I'll add a little more there. Okay, but not so much because if it retraces right back up to here, I'm going to be in a loss for no reason. So But here's the thing. If you're already in here because you're seeing a contraction, think about that. Major contraction. And then look at what happened. Expansion of volume on the breakdown in the direction of the trend. So look at this. Okay, contraction. Okay, sellers are getting a little tired, just a little. Play it out. Okay, notice the retrace. Now here's what's interesting. Look at the volume on that. Look at how weak that retrace was. There were no sellers, period. This looks very bullish, and you wouldn't have known, right? You truly wouldn't have known. Nobody knows. Maybe you're like, okay, if I've already been in the profit majorly on a short position, this doesn't look good for the sellers. Just take a little bit of profit here. That's fine. Okay, play it out. Boom. Look at that. Okay, and the volume was telling, by the way. So always you can always protect a little bit of profit, but don't overprotect yourself because then you miss out on stuff like this. Where you make the majority of your money can be on a few trades in your life. I kid you not. Versus when you have courage and you're trading by the proper rules and the fundamentals versus always taking profits. I actually disagree with the theory, oh, you can't lose money if you take profit. Well, some people take too fast of a profit and never actually make money, right? You're working for pennies. What's the point? So if you're not already like, in a major risk, you're technically in profit here. I wouldn't overdo it here, right? So sometimes it's like you just have to develop the habit of, not even the habit, just the intuition. Markets require in my opinion, experience and intuition. I've never met someone who just comes in as a prodigy. You meet a lot of those people in life over time, right? When it comes to math, when it comes to school, when it comes to all sorts of different things. Oh, they just get it. I've never seen that in markets, not one time. You see a lot of really smart people that enter markets walk away dumber because they lost all their money because they applied the same approach and strategy that got them successful in other things here. But markets are so much more humbling than that, which is why they're so hard. But the reward is greater too, right? Not too many ways you can make $1 million quickly. Maybe not quickly. I don't know. It takes a few years, right, to learn, but it's pretty quick compared to most things. Um, so then we just get the market pukes and look at the expansion again. Consistent growth now in sell volume. Very weak retraces, no bigger buying. Okay, we don't bottom out here. What if you just sat in that short? Look at that. Now here's what's interesting. We had one signal here that was kind of a fake out, right? Bullish engulfing, no wick to the downside, higher high, great. So not a bad time to say, okay, I'll just protect a little. But again, if you're not in that position, imagine selling, down here. That's great, but what if it now retraced? So since you don't know, sometimes betting in the direction of the trend, entering more on a contraction right before a breakdown, adding to your position in a breakdown here just slightly, watching it closely. I'm still in the money here. I'm not in a loss at all. If it retraces up to 58, sit in your position, wait in this range. That's personally what I would like to do. And I'm not perfect. Like I've made this mistake. I've made all the mistakes under the sun. But now I'm showing you in hindsight what I would do. Wait until we retrace, see if we retest this. Because the reality is this: you have very little to lose here when you really think about it. We saw support once, twice, 3 times, 4 times. Puke. You really think the first breakdown we've experienced on expansion of volume, right? Think about this. It's just immediately going to retrace right back above here and hold. It's probably going to see some resistance first, right? So to me, it's like it's a no-brainer. Like I don't like this candle, but if you looked at volume, you would have had a signal. What the hell is that? Right? That there's nothing there. So in other words, no one was selling at that moment. Sellers had made their money, but no one was buying either. Where are you trading? Direction of the trend. So in this case, you get another puke right here. Um, and the market continues to the downside. Okay. And notice we're seeing expansion of volume, which is why it's so helpful. Now, even more interesting, when you look at it, what are we seeing? No bullish engulfing candles. Okay. Let's dive in there a little further. On a daily time frame, this is why I like daily. It's just easy. Imagine looking at the chart 15 minutes in the morning, or in this case, wherever you're at internationally, right? Whenever the market actually closes. In my case, it's 4 p.m. Pacific Standard Time. And for those of you guys who are new or don't know what I'm talking about, UTC. Just use UTC across the board when trading crypto. It's a 24/7 market. There is no perfect, oh, my time zone. No, the market doesn't care about your time zone. They're likely going to go based on a universal time zone, which is UTC. So, um, yeah, just something to think about. Don't go based on exchange. Don't go based on where you're at. Go on UTC. And 40 minutes ago, the market closed for me that day. Okay. So in this case, look at this on the daily time frame. What happened? Bearish engulfing, bullish inside, bearish engulfing, bullish inside, bearish engulfing, consistently bigger reds, smaller greens, even with the green here. Notice what we're seeing here, right? Lower low on the red, lower low on the green. So the lower lows and the higher highs actually matter. Like wicks matter. One could argue this is a support, but what do supports matter when there are no buyers? When in reality, you're in a major downtrend. Oops, I don't know what occurred there. Does that make sense? Break down even further. Where's the bottom? We don't know. This thing could have gone to 1,000. No one says it couldn't. Gosh, I hate when people enter so every 2 minutes. Okay. So this thing, like right here, just kept breaking down. We're seeing no bullish engulfing. We're not seeing any real support. Okay, interesting. Look at how that respected that. Either way, look at this. This is funny. I didn't even know what was going to happen here. Do you guys see that? Support, resistance. Okay, very straightforward, guys. Sometimes the hard part is position sizing. When and position sizing, in my opinion, right? And then over time, right, taking actual profits. Like when do you take profit? Well, in reality, on your first breakdown, should you be taking profit? Not really. Maybe protect a little if you entered wrong, like, and now you miss out on a lot, by the way. But that's what it comes down to. That's what the market requires if you want to succeed, right? You've got to be disciplined, and you've got to learn. In this case, look at this. We broke down further. Now here I'd start to take a little bit of profit, just a little, if I saw maybe one bullish engulfing or something like that, right? Because we're now really deviated away from this range up here. See how fast and violently we moved? On this breakdown, probably a little bit more if I was in actual short position. Into this retrace, even more, or get out. And that's fine because you've already made a lot. If you played it right, you made a lot of money. Market keeps breaking down. Let's just play it out a little bit more. That was the actual bottom, by the way. Now notice right here, we have a horizontal support and resistance. Let's just see what occurs there. Resisted, bearish engulfing. Here's where it gets interesting. Where do we actually bottom? We're not putting in more new lows. Where would our bottom be? Here. Okay, well, I know now. You wouldn't have known through this range. It's possible we just break down further. But let's look at volume. Let's see if we have any clues. Okay. Expansion of volume to the downside, right? And then a decline in volume as we build a base and a support. A base would be anywhere we've had multiple resistances once and twice and a support. Okay. So in this case, we're still seeing declining volume, which is fine, right? As long as we just wait to see what occurs now. Can we break above 42? Do I want to enter this right now? Not really. I mean, well, there's a couple ways you can play this. And so I'm going to give you some context. Now, before we continue on with this video, if you're enjoying it and learning something new and you want to take advantage of our Accelerator program, which is essentially one-on-one mentorship and coaching to help you secure, grow, and scale your crypto portfolio through 2026 with the Bull Runners and Altcoin Pro team, then go ahead and check that link in the description below. This is essentially your one-stop shop to hit all of your crypto goals this year. And yes, the spots are filling up quickly because we can only service so many one-on-one students and clients at a time. And the last time that we offered this was in the summer of 2025. And once we reach our capacity, you're essentially out for at least another 5 months. So be sure to apply. And before you do want to watch this video so you understand exactly what you're applying to do. But if you're accepted, you can join any one of our clients who've made the most out of this program. For example, and you can just scroll through all of our reviews. Matt Brown essentially 3x'd his portfolio in 2 months. Another one of our clients has been able to earn about $200 per day in passive income using some of the DeFi yields that we've shared in strategies. And Linda went to earning $14K per month in passive crypto income with the strategies that they learned inside of this program. So go ahead and check out accelerator.altcoinpro.com if you want to fast track and get one-on-one help scaling and growing your portfolio. Now let's dive back into the video. Anytime Bitcoin is down, okay, 70+%, this market, I'd probably go 60%. In this case, we are already down 83. Just dollar cost average across the board. Buy as much as you can over time, right? But I'm talking from like a swing trade perspective, okay? A day trading perspective. Um, that's what I would do. So I would always dollar cost average in this and just say I already believe and know that it's likely going to go way higher in the next bull run, or at least for new all-time highs, if not way higher. But in this case, right, where again, I'm just to confirm for those of you guys who are newer or don't have context, this is for a swing trade. Okay, is it possible that we break down further? Yes. So we're not seeing an expansion of volume to the upside. We're not seeing a break for new highs. Here, above 42 is where I'd get a little bit more excited. If I'm just longing, by the way. Okay, if I'm shorting, maybe down here. Or if we play this range here, imagine this. You take a short position right here, or like right over here. Okay. Stop loss just above the range high. That's fine. I get it. People get stopped out all the time. It's fine. Protect against the risk. Who cares? 4,500 would be your stop. You enter short here. And what if it just broke right back down to the bottom of the range? Take your profit here or just above the bottom of the range. Okay. Like however you want to play that is fine. So let me remove that and we'll play it a little bit more. Very helpful, I hope. Now notice, we kept trending down. And let's look at the volume. Volume really just continued declining, right? Until this guy right here. Now, every now and then you'll get like one big one or whatever, but like I want to see, this is nice to see. This isn't enough for me to be like, that's the bottom. Okay. But it is something that's interesting to look at. That's it. So let's just mark that because it's far greater and bigger than anything near it up until it's the biggest green we've seen since the 28th of that year, okay, into February. So that's nice. And what's interesting is this is the first breakout for a new range high. Notice that we're getting a series of what? Lower highs and lower lows, right? However, look at how big this candle is and look at how small the volume is actually, relatively speaking. The volume is really small relative to the rest of what happened over here when you zoom out. But look at how big of a candle it printed. So sometimes having the size of the candle really helps too, because you can see it doesn't even require that much trading. That not that much volume has to enter for the market to move that much. This thing is really contracted. There's like no liquidity in it. So any buying is going to send that thing flying because there's no one selling. Sellers are exhausted. That's telling. Is this the bottom though? Well, realistically, not really, because is it possible, like we saw in the past over here, that we failed to put in a new high above these highs right over here? Yeah, easy. You could just trade, 38, 39, breakdown. This is why I like to wait a little bit more for a confirmation because you really don't miss out on that much. Like, what do you miss out on, right? You're just being impatient is what it is. I'll play it out. Okay. Now, notice resistance yet again here. Okay, very close. I mean, within a point or two. So we'll just, if you really want it to be perfect, there you are. That's your resistance. Okay. But what I'm liking here, and this is what I'm starting to see. Does anyone notice this? Lower, lowest low, higher low. Ain't that interesting? What are we starting to see now on the volume? Okay. Really zoom in there. Contraction. Okay. You could even argue up until here. Now we're seeing a little bit of a what? Expansion. And it doesn't require much to get it back up into this range with some really big green candles. This is fine, by the way. Bearish engulfing. You're going to get these types of volatile plays, which is why sometimes I just like buying above the range. Because that's a confirmation. The price is confirming to me. And then keep a tight stop, right? On the breakout day. So let's do this. Play it out. Wait. Now look at the volume. Okay. Tightening, tightening, tightening on a retrace. Interesting. I'll just keep clicking this thing until it goes. I don't want to overdo it because I want that day. Look how long this can take sometimes. Now, again, what's interesting, what are we trading back up into? Look at this. We're trading right back up into the range resistance, right? And look at this. In a retrace, counter trend technically, right? We're declining back into this high. Now, if we can expand in volume on a breakout, that to me is a pretty good confirmation. Okay. Bam. Look at that one day. To me, that right there tells me this trend is official. And now I have a series of what? Multiple higher lows and higher highs. This right here, here, and now for the first time, here. Trend is up. And volume has expanded. Not, and even when you're building a base into the range here, we're not seeing any selling, we're not seeing new lows. Sometimes you just got to wait for that expansion. And if you don't see it, you don't have to trade it. But this right here is a good day to buy. And then you can just set a stop right below the low. Okay? You can add to a position on a retrace, maybe like on a 10 EMA. Try to like get this out of the way here or remove all that crap. How about that? Okay. And I'll just put a line here. Maybe on a 10 EMA. So like imagine we'll play it out for a second. Okay. And look at how well that did for you. Like start adding to a position here. By the way, you're not in a loss at all. You're in profit. So and you saw an expansion of volume. And by the way, when a new trend starts, it always starts small. This volume looks a hell of a lot smaller than what it turns into over there. Let me show you. This is usually how it occurs. Let's do this. Bam. Auto. Okay. Turn that EMA off. Oops. Let's do that. And let's come over here. Look at this. In the earlier stages of this trend, by the way, this was the start to that bull market. What occurred here was a black swan event, right? 2020, COVID. This is truly probably one of the only times we'll see something. I mean, not the only time, an event of this magnitude for all markets, not just crypto. We've seen this type of stuff in crypto all the time when it was younger and nascent. Maybe not anymore. I'm not sure. But it's still not liquid relative to most markets. So I could argue we could see it. The trend from here in this moment in time, what this was the actual technical bottom of the entire bear market. Okay. The other one was just a breakdown, and which immediately got bought back up for a nice V-shaped recovery. In other words, not even COVID was enough to fight the trend. Now you could argue, well, that's because of QE and because of low interest rates. I don't know what it is. There's this weird dynamic where I write it all off anymore, and I just focus on if the trend is up, not even the Fed's fighting that. Like it's weird. It's like the Fed can add fuel to the fire and a lot to add to it. But for whatever reason, when the market is at a point and the minds of the masses are at a point in the direction of that trade and trend, nothing is enough to stop it. And almost all events work toward it. It's weird. Like it's kind of woo woo in many ways, but that's just I've seen it enough. It's weird. I don't know how to explain it. I don't even know if that makes sense to most of you guys. Now you probably think I'm like a hippie and I put sage all around my house, but I can assure you I don't. So let's see here. Look at this. Tiny expansion. Volume. You wouldn't have known. Right here. Look at this. Expanding. Before all this came in, boom. Even bigger. Boom. And look at how tiny these look, relatively speaking. Okay. And then look, contraction. Actually, is that the top? That's crazy. No, and then expansion. Right? Contraction, expansion. Right? And now look, this is kind of crazy. Look at all of the major selling that's happening here. We're seeing expansion. Here's what's interesting. This is why you have to remain agnostic and not think about all the news. We're seeing an expansion of volume, but where? To the downside. So even if we were to range here for a while and come even to 100, like to me, this is a major downtrend I want to bet to the short side. Place your bets. And on contractions, you have real opportunities. So let me go ahead and answer a question or two. In terms of where we're at, I'll put it this way. We'll answer a question or two, maybe closer. I'll just tell you, like, this doesn't look good, guys. Remember last week we were chilling. Let's look. I wish we had more strength, but we really don't. Well, technically Tuesday, right? We'll start Tuesday. We start like Wednesday, technically, every single week, but Yeah, we were right back here. And last week, I remember specifically stating on the call, if we struggle to get back above 93, not looking too hot for the crypto market. Like we need to break above there. Very straightforward, horizontal support and resistance. It's not sexy technical analysis. It's very straightforward. Anything below 88 is not really great considering this is a range support. Should be, right? And we know this because look, when we broke out here, we saw a major move, right? The next day from essentially 87 all the way up to 93, right? A big old move, which carried us all the way up to new all-time highs. So this right here is a major range resistance that became a great breaking point. Like the market was ready to roll over and continue to the upside. Okay, in this case now, what are we seeing? A breakdown? Now we're not seeing major expansion of volume yet, but this right here, all of this volume beforehand is very telling. Okay, everyone's getting out. Institutions, I don't know why. Like I can't explain why. I don't know who is all behind it. But here's what I know, the volume is telling me the story. And so now we're seeing a contraction as we're building a base. When you really think about it, if I were to remove all these lines and just look at this, where's our base? Where are we seeing a resistance, right? If you really wanted to use a trend line, not only did we break here, right, for a shoulder, a head, which is very, this isn't textbook, guys, but this right here is a, it could be very tiny head and shoulders. By the way, head and shoulders never need to be flat. They don't need to be flat. So you know, they don't need to be a straight flat horizontal line. Head and shoulders, you can use angled diagonal lines. So you know, as long as you have points touching at the shoulders and the head. Now, in this case, this wouldn't be textbook because notice these highs are higher than the head here, but it's enough. Like again, nothing needs to be perfect. If you just look at patterns, sometimes you begin to see them, and I'll explain how that looks here in a second. There's your 3 points, right? There's your kind of shoulders. There's pure chartists out there that would be like, that's not a head and shoulders. Like personally, I don't care. I don't need to be right. It's just look at it. Looks very bearish, right? Like where are we seeing resistance? It's pretty obvious. If you didn't even know what you're looking at, I don't know. Did we sell off once and twice here? Yeah. Perfect. Okay. What should you do now? Right? But now this breakdown here, and back below what should have been at least a decent support here at 88, not looking too hot. So my real range is at this moment in time, oops, where we're building a base, and notice what we're doing. We're building a base right here between 84 and 93, and we're contracting in volume. Okay, building a base, which means Bitcoin and the crypto market have just chilled out for a period of going all the way back to November 20th. So coming up on almost a month. But the contraction isn't leading us to any expansions to the upside. And if the trend is down, I'm willing to bet on a breakdown, it's not going to look too hot. It could be another week, it could be another 2 weeks. I don't know. But I know that I'm looking more at targets now. So on a breakdown, where's our next major range support? Okay. Well, I don't know. Look at history and say, well, that looks to be kind of like the area. Drag and drop all the way. Okay, we could hang out here for a day or two at 89, right? Right here, and then continue moving down. But there really isn't that much support there, in my opinion. Our next major range support is going to be our prior all-time high at 73 or the major range lows of like 75. And if that occurs on Bitcoin, the rest of the market's going with it. I don't care what it is. I don't care if it's hype with the best fundamentals. We've covered this, and I don't even care to be right. I literally just want you guys to start seeing this stuff so you can protect yourselves in the long term. But even with hype, right? We were talking about all those great fundamentals, even from our team, which is really great, by the way. But they sometimes they look too much at the fundamentals without focusing on what's occurring on the price. And the price is actually your best signal, first and foremost. Oh, but they're buying back all this stuff. Oh, they have so much, they're earning more revenue fees than anything. Do you remember literally? I have the call recordings, we have them, where I showed you. If we start rolling over like this, we look a lot like Tia. And I've seen this a million times, and this is likely the top. And I wouldn't be buying until we're back above healthily $50 to $51. I remember seeing that specifically. Look at where we're at now. Why? Because not even all the greatest fundamentals can prop up the price of a great token. This thing is at the mercy of the ocean, the currents, the trend. And this pattern just sucks. Now we're putting in new lower lows, new lower highs. We're sitting at 26 bucks, willing to bet someone bought a dip, and now they're buying the dip of the dippity dip, right? Uh, so don't be that person. Let's go and look at, and here's another perfect example of that, which is why I'm kind of like a little bit more bearish than I want to be, nor do I don't care to be any one thing. Maybe I don't like those terms because then people sometimes aren't multifaceted in how they think. And so I just wanted to be clear. I don't care if I'm bearish or bullish. I care to be on the right side of the market. But looking at this guy, remember last week we were here, somewhere in here, like right here. Like if we can get back above here, great. But this pattern, what does it look like? Very similar. Lots of volatility, right? Major, blow off top expansion type pattern here. Uh, is essentially what they call an exhaustion gap. Before more volatility, price is trying to be supported here, but what do we see here? Exact same thing. And a market leader, by the way, the QQQ is like the market leader. It's like where all of the money has essentially right? It's all just like what's the word I'm looking for? I have the word. I don't know why I'm forgetting it right now. It's concentrating. All of the money in the market's concentrating into the biggest and the best stocks. And you're noticing the same thing is occurring in crypto, which means I don't think we're ever getting altcoin seasons to the same degree. But this pattern right here, eerily similar, right? This is rolling over and it's going to struggle now to get back above 62. So to me, or 6'2". So to me, it's like, where would you want to add to a position? I wouldn't probably add to the middle, but adding to this range here would have been great. Adding to the range lows right here, 5'9", wouldn't be bad, right? On a short. And knowing that this is likely probably the top of the stock market. And then when you see laggards start to play well. So when I look at the Russell, which I'm shocked I don't have on there, look what occurred right after. So if I put up, just add that real quick. Okay, perfect. So do you guys see this? They both trade very correlated, very similar to most cryptos, right? We have an all-time high here on both essentially within a day, okay, or two. Both trade down together. But here's what's interesting, okay? What the market leader since the bottom of April of 2025, and actually generally speaking for years, right, has always been the Nasdaq as an index. Okay. So I look at market leaders. Like, where's the majority of the money going? Is it putting in better gains than everything else? Is it outperforming other things? Perfect. That's the market leader. When the market leader tops off, okay, again, you'll have correlation across the board. But what you're looking for is these little clues where the market leader is topped off and is now putting in a lower high. Whereas something like the Russell, when you look at the Russell, notice how it's putting its highest high in later. This is what you call a laggard. Money moves into the laggards after the moves are done. Then what's even more interesting is when you look at that monthly, or let's go to the weekly, sorry. This is the all-time high, going all the way back since 2021. In other words, the Russell's done nothing since 2021. Okay? Laggard. Then finally, it does its own little exhaustion gap, really. I wouldn't call it a gap because there's no gapping, but a nice little exhaustion rally. While the QQQ is putting in a new lower high. The leader is now falling behind because it's done. The moves are done. And the Russell, the laggard, is finally putting in its all-time high, going back to 2021. This is your indicator. Like that's another. I start to see those signs and signals. I'm like, yeah, the market's done. Which, by the way, when I say done, right, there's money to be made on the short side. You can always make money in the markets. It's just done trending up. Okay. So QQQ, done. Lower high, daily, rolling over, right? So let's go back, and volume's a little tougher to read on these indexes. I would probably do that more on stocks and focus less on the volume directly because a lot of the times, a lot of the volume, especially if you're on the hourly, like look, right? And this is a little cleaner than you probably see on the S&P, but this is usually what happens. You see a lot of volume on the opens and the closes. In other words, midday, everyone's taking their lunch, Wolf of Wall Street style at that fine dining restaurant upstairs. I don't know, but that's usually what occurs. So I focus more on what's the strength of the index, what are the indexes telling me, okay, what are the laggards and leaders doing, And then I use that information when looking at crypto. Is crypto lagging or leading? Or who are the leaders? Relatively, is one stronger than the other? Is it holding up better? And then I only focus on first the chart and the price. What is the price telling me? Then the fundamentals. And sometimes you'll get a confluence where the price is looking good and the fundamentals confirm it. That's when you can really step on the gas. But that's extremely rare in crypto. Extremely. So very difficult to know. Um, Not know, very difficult to find cryptos that do really well alongside fundamentals. Um, but in terms of the charts, right? I'm looking more for breakdowns and shorts. Anything that is holding up relatively better than Bitcoin, I don't care right now because I think when Bitcoin pukes or if it pukes, I don't know if it will. I'm sure it's more likely than everything else is. Weakness wise, right? Which one is lower? Like right now, Solana's looking relatively weaker. Notice how it failed to put in a new higher high here, and notice how it's back down to its range supports. Bitcoin is just slightly above, I believe. Let's double check, just slightly above, right? It's range low here. So Bitcoin's slightly stronger than Solana. XRP is looking weaker than Solana. Solana's somewhere right around here. XRP is back down to its almost wick down here. So off of that breakdown today, or yesterday, I should say, according to UTC time. So XRP really has a lot of room to break down. I think likely it'll see some support at 160, potentially up to like 172 would be that first range of support. But there's just too much room here. This is not healthy for XRP. Um, and so your first major support, in my opinion, a major support, not just an easy one. Unless, of course, somehow, right? Some market, maybe they have a really good market maker on staff. And by that, I mean they'll hire a company like maybe a major Binance or someone that has a lot of money, like a Wintermute on Binance, you name it, where all of the money really is for an XRP market. Because you have to think about it this way, even with OTC, right? Over the counter type stuff, at the end of the day, someone is stuck with the bag that they have to sell to retail. They have to get the price that is the market's quoting. So they might be able to do better deals if the demand is great. But in the case of a chart like this, the demand is obviously not great, which means the person that's trying to offload, let's say, millions and millions of XRP, is more often than not stuck, right? Getting 170 to 165 anyways, which means I hope that the price is going to be higher quoted at the market. That way, one day I can get out for more money. But where there are no buyers, that it gets really sketchy, especially with this much room to the downside. So realistically, I think, yeah, one set on a Bitcoin puke, your first range support would be somewhere here, and we might see XRP supported here for a little while. But I would watch those prices closely because your real supports are going to be down here at 130 to 125. Which, when you do the math right, how much does it pay to hold that, hoping or waiting for, news and information to make this crypto better? That's a 65% dump. And in order to break back even, which could be years again, does no one remember how long it took XRP to get back to our all-time high from 2017, 2018? 7 years. Do you have another 7 years you'd like to spend potentially? I'm not saying it's going to take that long. It could take two. It could take five. But the price will tell you. You'll have time. Like, people need to stop worrying about missing out. There is no such thing as a missing out. What you're missing out on is time when you're sitting in something you don't need to. You would have had time here to enter all the way through here, right? When you're looking at a chart. So, not that big of a deal. You're not going to miss out. It's not going to 10,000 overnight. There is no market. If you're imagining it, you're imagining it. That is not me. That's David Schwartz. So that's something to be very clear about when it comes to tokens. XRP is a token. It's going to trade with the market. It's currently trading with the market. Sometimes it's relatively stronger. Sometimes it's relatively weaker. But being very realistic and agnostic might actually save you, and ultimately save your time more than anything while you learn. So all cryptos right now are trading very similar. They're going to trade with Bitcoin. They're all risk on. And every now and then you'll find something that's really interesting and might do well. But trade it. I'd be stricter on my risk management in a bear market like this versus in a bull market. In a bull market, right? Like, a rising tide raises all ships. So it's really hard to be wrong when you're in something, which is why everyone feels smart and then gets wrecked when the bear market starts. But just something to think about. So let's go ahead and answer a question or two. It's 5:10. And I only have like 10 minutes tops to answer some questions. There, you get rolling. Yeah, it's so funny. That's a good meme, John. I know trading is easy. Come inside, let's talk. It's a lion. Oh my goodness. Okay. We're going up to 100K and down another 50%. I wish I could tell you what's going to occur. I don't know, but I know that you will see the signs. It's kind of like, there's an old biblical phrase that Jesus used a lot. He's like, you won't know the day or the time. Not even the Son of Man knows. However, you will know the season, right? When the leaves start to turn, right, to a different color, you know that fall is coming and winter is coming. So in the same way, you can look at a chart and say, the weakness, like, oh, we're getting to this range here. We're contracting. Do I know when it's going to occur? No. But I can see that the season is there. And so I'm prepared. I'm ready. I'm waiting. And then when the time is right, I pull the trigger. Okay? But you have to be prepared. You have to be watchful. Uh, so there's a good example there. This week is quad witching, where four markets have expirations on Friday. I don't know what quad witching is. I assume you misspelled that. Index futures, index options. Yeah, I don't even focus on that as much. I'm sure there's gonna be volatility. I also think I was totally forgot to cover this. I do believe that we're gonna get. I think this thing is off. I don't know what's going on here. Bloomberg, come on. Okay. I think the Japan news is big, for sure. With and it's rare that I'd care about most markets, but we'll do United States. Where's Japan? Do they go to the right to left? There we are. Cool. And we'll do this and we'll apply. So we have our core CPI coming out, which somehow we still don't have a forecast. Pause. What? It's Tuesday. I feel like we're getting another 25 basis point rate cut. Excuse me. No, no, no. I don't know what I'm talking about. We already got that. I think we're probably gonna get slightly higher inflation. My personal opinion, maybe 3.1 to 3.2%, which will not be great for markets. But if it's forecast and everyone expects that, I don't think it's gonna be any major volatile event. Um, I think the market's just going to continue trading in the direction it is unless we get some shocker, right? So if you're in any futures or leverage coming into tomorrow or the next day, probably not wise, considering we're also, I don't know why Japan didn't pull up. I thought I put it on there, but not a big deal. On Friday, they're also it's confirmed that they're increasing their interest rates by another 25 basis points, the highest in 30 years. The carry trade is no longer alive. There's no more easy or cheap borrowing there to support other international markets. I think that's actually a pretty big one, the BOJ, and it was enough to make markets crash the last couple times 20%. So I don't think we're going to see that big of a. It could happen this week if that's the case. But since it's already expected and the market hasn't already done that, my personal opinion is it's already kind of priced in, and the market's just going to continue to trend. Um, but in terms of all of these other indexes and futures, I don't really pay attention to that. There's just too much. I think, well, I mean, volatility is very easy to predict, right? You're like, hey, major event, prepare for volatility. Like everyone says that. Um, so more often than not, I would look at what people are expecting. That's it. And if, for example, the expectations are bad, let's say, just to give you the easy example, 3%, and tomorrow they come out with a forecast or an expectation of 3.3%, and the market has, like, at the time that that expectation is out, the market hasn't already made a major move, don't worry about it. That it is priced in. Does that make sense? I think that's more important to think about in that way. When should we pull the trigger? Shorting. Whenever you see the price confirm, in my opinion, or just a major contraction. Like personally, I wouldn't be, I'll put it this way. If you're taking a short position, and I'm really just going to try to be agnostic, imagine you're just starting out, right? Um, it's better to take a short position starting here at 92 to 89 because this is a confirmation that we just saw resistance. So you're trading closer to the top of the range with a tighter stop. It's possible that through this week we continue to trend back up to 91 to 93. So now adding to a position here, you're stuck for a week or two. And if you're using leverage, you're paying fees on that, right? So if you're trading here to start, maybe not the best time, but it's not bad if you have enough room, if you have enough time, if your fees are small. Like there's a lot of variables when it comes to trading. Probably better to, it would have been better to add up here. In the case of a breakdown, do I see an expansion? So if we break below 87 down to like 84 in this range here, and we see a nice little expansion of volume, taking a short position here, tighter stop, watch for the retrace. Oh, it continues breaking back down, add to the position here, and just keeps trending down. But like, I'm not saying it won't break down tomorrow, but because I don't know, it's really difficult to give you direct advice. Best time would have been to enter around here. Okay. Next best time is probably on the breakdown. Or if we come trend back up to the upside, but then at that point, it's like, oh, we got a kind of slight uptrend. Could trend all the way back up to 100. So I think waiting for a touch of a range and then watching the candles and saying, oh, did we actually see a resistance? Is this a breakdown? Yes, right here. You begin to like recognize it, right? Look, lower highs, bearish engulfing. It's official. This was the local top. And you're trading closer to the upper portion of the range versus at the bottom here into the direction of the trend. Either way, I wouldn't be too afraid of taking shorts here at any point in time. I keep doing this crap. Let me remove all that. At any point in time in this range here, especially above it, because I just think it's going to be so difficult for Bitcoin to truly get back above 100 and stay there at this stage of the market. One, two, the volume is extremely telling. On all of these breakdowns, look at the major expansion of volume on the sell side into a new trend. To me, that's like I'm actually very confident in shorts. Just when you take them and how big you take them, and are you taking on too much leverage? Like, right? There's a lot of variables. So learn to protect yourself. Learn to keep your risk tight. Even here, even if you didn't make money this bear market, right? Like learning the skill could pay you into the next bull and bear. I think that's extremely important to think about. Okay. Any final questions? I hope that answered your question, Alex. Also, Jose is the man. So funny. Privately, I reached out to him because on the recordings, I started noticing like he has a band he loves, and he had a hat on in the photo that looked like a pentagram. I'm like, bro, I'm not about that life. Like, you got to get that off my recordings. He's like, oh, for sure, I'll change it all day, bro. I was like, oh, thank you. And it wasn't like but it looks so much like one. I'm like, every time I have a recording, there's a pentagram. I'm like, I want that out of here. So thank you, Jose. I appreciate you changing that. That was a little while ago. And then you have Bowen just looking all good in his photos. For those of us who are older on the call, that's called glazing. I just found that out by Gen Z. They call it glazing each other when you're like, like really like hyping someone up. Okay, I think we're good. I don't have any other questions, so I appreciate you guys and your time. Market's looking short or bearish, if you will. And just practice that risk management this week, guys. Practice pulling a single chart up and looking at the volume alongside it. And I think that'll really help and give you guys deeper insights into what's really going on. And whenever you see really small volume, but with a really big candle, that is very telling. Okay. All right, guys. I'll see you in the next week's call. Have a good one. Well, that is it for the video, folks. If you enjoyed it, be sure to check out any one of the links or resources down in the description below. And also remember, you can make money shorting the market this bear market cycle, and you can do that with a fraction of your portfolio. In other words, you can risk a very small amount and trade with other people's money, up to 200K on this platform, but even just $100,000 when you have 10 tries and an unlimited amount of time to pass the test in order to use the breakout prop firm. So $1,000 can get you access to $100,000 of other people's money to trade, and you can keep up to 90% of the profits. And if you have any questions, just go and click on that link below. You can click through the FAQ, you can learn more. And the coolest part is you can literally withdraw your profits anytime on demand. So go ahead and check that link out in the description below. Thanks so much for watching. Be sure to apply for our Accelerator program, and I will see you in the next video. Goodbye.